Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. Over the next 25 minutes, we'll talk about two specific things. One is the AMFI data, and there is, I think the headline, coincidentally, is that the thematic funds have seen lower flows. You can even argue that active funds have seen lower flows, but I think the bigger drop or the bigger standout for me was the pullback in thematic flows, even as the small and mid-cap funds have continued to see higher inflows month on month. The SIP streak, I think, comes off after 16 odd months, June 2023 or from thereabouts. We've had a consistent uptick. There's a 2 crore downtick in their SIP streak as well. So that's one. But the reason I use the term coincidentally is because we are going to be talking to our two experts today, Juzer Gabajiwala, Director of Ventura Securities, and Mohit, who is the co-founder and CEO of Moneyfront, on thematic funds. And what are the kind of thematic funds that you should look at in your satellite portfolio? And why is it that these gentlemen might be liking some of those funds? So, gentlemen, both of you, thanks so much for taking the time out and being with us on the show. Can I briefly talk about the AMFI data first before we talk about the topic that we had chosen? And Juzer, I'll start with you. What did you make of the fact that while small and mid-cap funds continue to see increase in flows, thematic funds, active funds by and large, even large cap funds have all seen a dip? Do you read too much into the month-on-month data, or you would wait for a trend to develop?
So first of all, thanks Neeraj for having me. And in fact, yeah, I've just had a brief glance at the data. I've not had a chance to dissect it completely. But the view actually what we have is that the small cap, actually the whole narrative has actually undergone a change. If you see the small caps, the size of each company is much larger. So in fact, we actually like the small cap space much more than the mid cap space. Having said that, we have seen that the SIP flows have stagnated a bit. Thematic, we don't like it that much in terms of because they are more on the riskier side, and maybe I will talk a little bit later on that. But we need to see some more, and just looking at a month-on-month trend, we need to I think wait for, because this again year-end data. Let's wait and watch, and let's see how the whole trend develops.
Okay, Mohit, what about you? What stood out for you? Like I said, for us, the thematic funds getting a bit of a slowdown was maybe the standout. What stood out for you from the data if you have had a chance to see it?
I have glanced at Neeraj. Thank you for having me on the show. So look, I think on the SIP front, I think it's just a kind of a small pause. Perhaps investors have seen market correcting last couple of months, and they're a little wary to add on to new SIPs. Having said which, the SIP book hasn't depleted. Maybe there are few more pauses this month or last month, which we have seen across investors trying to wait, or perhaps few investors trying to time it out in spite of whatever and however you want to convince them, right? So I think those are few cases here and there. So the SIP data remains static. On the sectoral fund, Neeraj, I don't think so. We have seen too many NFOs last month on the sectoral side, and the biggest driver of sectoral inflows has typically through the year been new fund offers. I think there were only a couple of them or three NFOs, if I'm not mistaken, last month, which is what has kind of led to this mobilization of around 7,600 odd crores. But otherwise, the biggest driver of sectoral funds is per se NFOs, and there weren't many sectoral NFOs in the month of now.
Point well noted. Okay. Okay, so Mohit, would you say that uh, therefore a base that is hit sometime in the past, because there would have been a lot of NFO in the thematic side, and that's maybe a bit of a top, but normal parlance or normal monthly flows will never be so high as we might have hit when there were a clutch of new fund offers on the thematic side?
Honestly, I think that's the trend, Neeraj, and we can't dispute it because that's what data says all through the years, that distributor fraternity is completely charged up
Yeah.
and aligned for a single NFO when it comes in the market. Investors think that there is something new or unique which has come up. They try and lap up the idea, even so it would be the 10th repetition of the same idea. right? And that's how the industry has been functioning, in spite of all the noise and awareness which we try and create around it. But that's the typical pattern of industry, that NFOs tend to mobilize the resources much quickly on the ground.
Okay, fair call. Now, to the topic at hand, because certain thematic funds have done well, and frankly now AMCs are also smart in that they are coming out with thematic funds necessarily when a large portion of the theme has played out. It's happened in the past, and uh, and therefore in a satellite portfolio there might be room for the investor who is not too risk averse to take a small exposure to thematic funds. So Juzer and Mohit, we just thought that let's dedicate today's 20 minutes to somebody who is willing to take risks, somebody who is willing to spend a little bit of time analyzing the portfolios, looking at the performances, and willing to take that extra risk for that extra alpha or return in the mutual fund side, and therefore in the satellite part of the portfolio willing to take exposure to thematic funds. So if we had to, if with that as a premise, Juzair, I would love to know what quantum of exposure would you give to a thematic fund for somebody of this nature and willing to take risks, and give us an idea of one of the thematic funds that you may like and why.
So I think, Neeraj, before I get into it, I think a lot of people have, actually mistaken sectoral funds also to be thematic funds. So one actually also should look at all the cons of investing into a thematic fund, before looking at the pros, because the pros are, the narrative basically gets, governed by the returns. And we also should not lose fact of the sight that you need a high level of conviction. So not only it should be the distributor who's has a conviction, even the investor needs to have the same conviction, because we have seen investors running away at the drop of a hat the moment the returns become negative, and then whether the person is willing to take risk or not willing to take risk, it just goes away, right? And what we have also seen is that even a lot of AMCs, have because now they don't have any scope to add funds anywhere else, right? And that's the reason why these thematic funds have become the flavor. So that is another thing which you should look at. And one of the most important thing at any point of time when you're looking at a thematic fund, please understand that a theme is different from a sector, right? A sector will be, the infra is a theme, right? But pharma is a sector. So I think people need to be very, very clear about when they are, looking at the funds. And one should not forget that we had one infrastructure theme which had run up somewhere in 2008, and it took nearly 8 years for the theme to again recover back its NAV. And the same thing had happened even with the PSU fund. Okay, so I hope I've set the context on that part. So ideally, that means this is not a fund for a first-time investor. So it should be for a person who is already, an investor who has already invested some portion of his money in, the diversified equity funds. Because the stocks which are there are also available for the diversified equity funds also, right? So having said that, some of the themes which we actually like are, maybe something like a innovation fund, because the reason being why we like innovation is that it's going to be very difficult for a lay person to try to understand, what are the innovations which are happening around at various company levels. Right? So you may just know about one or two here and there, but the second thing is that in many innovative companies, we will not even understand the valuation matrix, right? So we like this space, and the second one we like is the business cycle, because you see that in the business cycle, you need to be quite adept at trying to see that whether the business cycle has run up and whether the new cycle will take over. So these are the two categories which we like. Most of the other categories are, according to me, are more or less nothing great to drive home about. Like manufacturing is, so other than services, everything is manufacturing. So these are the two which actually we can look at.
Okay. Juzer, I'll come back to you for specifics if you can share, but Mohit, to you as well. And yes, I agree, Mohit, that we kind of use these terms interchangeably, right? Thematic funds and sectoral funds, and they both come under this. So a lot of people might actually buy thematic funds or sectoral funds thinking one is the other. But assuming that you try and think of this as a broader umbrella wherein you're following a particular sector or a particular theme as opposed to a diversified fund, if you will, what is your sense of what quantum of exposure do you give or would you recommend to the overall or the satellite portfolio of an investor for these sectoral / thematic funds? And maybe we can start with one of those funds that you may be liking and why so?
Got it. So Neeraj, look, I agree with you that semantics aside, we are talking more of a satellite approach out here, which is more a tactical approach and not a core strategic part of any investor's portfolio. So when we talk of tactical allocation, typically our approach, Neeraj, has been an 80-20. 80 for strategic long-term investments and 20 more for tactical short-term plays, basically in a portfolio where client can assume that kind of a risk and the profile permits, obviously with that caveat. Right. So when we talk of this broader umbrella of 20% tactical approach, I fit in everything. It could be an international allocation, it could be a commodity allocation, it could be a sectoral or a thematic per se. For me, that's a tactical play, which means it's more short-lived and the movement could perhaps be a little faster out there. So from that perspective, Neeraj, if you recall, I think we had a conversation around a month back where I kind of maintained my view with on IT as a sector. And I was pretty bullish on that. Last 1 month return for IT funds or IT index per se has been almost 7 odd percent. Last 1 year return has been 35 odd percent. But I continue to remain overweight or what do you say positive perhaps on IT digital as a theme. Right, so it's a slightly more broader context which I'm taking, not per se the IT index, but perhaps a digital theme overall, which would mean all your digital plays, a few large cap and mid cap IT stocks as well. My prima facie, the reason is very straight and simple. I think it's more a part of the overall Trump play globally. US has been seeing a massive resurgence in all the tech stocks, which will kind of percolate down to India also. And with the rate cycle reversing, this is a highly rate sensitive sector. Rate cycle likely to reverse in India and rate cycle already reversing in US means extremely positive. If US companies do well, Indian companies will have a lot of order books flowing abroad. They are the major service providers to quite a number of US companies and European companies. So I think overall our view remains positive on the sector per se. And with respect to funds, if you want to name a few, I would perhaps go with the Franklin India Technology Fund or a Pru ICSA Technology Fund on the same.
Okay. Mohit, what would the risks, major risks be? You briefly may have spoken about it, but if somebody wants to invest in this, what are the major risks that somebody should keep in mind?
Look, Neeraj, if you're talking per se of the IT as a theme, I think a larger part of the rally has got played out, to be very honest, right? A US rate cut of 75 bips has been taken in. I don't know how much the curve permits now further, and India might not have a very prolonged rate cut cycle this time, given the inflationary headwinds and we're all around, right? So the bigger challenge to my mind, is that the rate cycle might not be very prolonged. The larger part of the gains has already been taken in, and I think look, honestly, out here the mid cap IT space seems to be a more reasonable play, and perhaps the bigger portion of bullishness is around the digital plays in the ecosystem, right? So finding a right mix in a fund can be a little challenging out here. My submission would be for investors to be extremely cautious and go only with the advice of a financial advisor and as per your profile. And you have to be fairly nimble. If you actually try and get into this space, then you have to be nimble. The view out here is like a year's view.
Okay. Point well noted. So that's on the tech side. Now, Mohit, I would probably request you to one more, but before I do that, Juzer, I'd like to come to you on innovation funds. There aren't too many out there in the market, right? I mean, are there some particular houses? I'm not asking you to make a recommendation, but give an example of any particular innovation fund. It need not be an exhaustive list, but the one or two examples that might be there so that viewers have clarity. And Juzer, couple that up with what is the kind of holding period that you think of when you think of a fund like an innovation fund? Not too many people would know about, the merits and demerits or the risks and pluses of an innovation fund.
Yeah, so actually, so innovation will also, embrace digital, right? So to a certain extent, the digital play also comes down over there. And to name a few, you have actually one is Nippon Innovation Fund is there. Then you have Bandhan, then you have Access Innovation. So these are the three as a top of the mind recall. I think there are around six funds is there. I think even Tata has got an innovation fund. So, so these are the funds which I could name in the space which you have, and I believe quite a lot of players will start looking at this because I think one alpha generation will be possible in thematic funds, but you'll have to be very cautious. You may be able to you have to be have the willingness to take a hit, right? So that is something which one has to look at also. Like a classic case has been when you look at the defense sector. HDFC Defense Fund, we saw in a 1 year, guys getting a 10%, sorry, 100, nearly doubling the money in 1 year. Whereas in when MOSL came out, the NAV is down to just around $9. So it's a 10% loss. So the timing of entry and exit is also very important. And I think once if you get a return which is more than 20-25% in a year, I don't think you should wait for it to play out more. So anybody who's made money in, like, let's say HDFC Defense Fund, he should at least remove his principal out, and then he has a opportunity to play on the entire balance amount of the money. So I would look at a time period of around 1 to 2 years is what it can play out in, because we are looking at more of this as it's not a portfolio, more of a satellite, and with a 10% type of an exposure to these teams is something what could make sense.
Okay. Mohit, I'm sure I haven't missed it, and we'll need to get to queries in a moment, but aside of the IT thematic, anything else that stands out for you?
Look, Neeraj, I think, and that's more like a consensus trade on the street. The banking, financial services, and capital market play is something which is perhaps picking up now. It's already picked up a lot of steam in last one and a half month. And if you see the overall sector, it's been a laggard, stark underperformer for last couple of years put together. So the private banking space, the large names in the private banking space, even few of the PSU names, and more importantly, the financial market plays, the depositories, exchanges, the wealth management plays. I think that's one space which is looking extremely attractive, very reasonably priced to my mind. However, investors have to be cautious that if you buy any large cap or a flexi cap fund, by virtue of they're trying to beat a particular benchmark, they're already having 20 to 35% exposure in financial services as a space, right? So if you're wanting to go to an exclusive banking financial services fund, then you are taking that much more additional risk. So, but other than that, yes, I think that's one space which can be now played out, and it's looking extremely positive to us.
Again, okay. So it's a bucket, and it's interesting because today, or I think last night, Motilal Oswal came out with a very large report as well of the capital market sector, and almost everybody seems to believe that this is a multi-year or maybe a decade and a half story ahead with the kind of penetration levels that India has on multiple such things, and therefore maybe these businesses, capital markets, and maybe even banks which are trading at good valuations. Okay, so keep that in mind. But viewers, remember, for each of these, you need to ensure that it is a part not of your core portfolio but the satellite portfolio. You need to know why you're buying into it, and you need to be, at times, viewers, much as we like to tell you that in mutual funds you should buy and hold for a really long time, in a lot of thematic or sectoral funds, at times it might be prudent to even get out at the right time and not necessarily hold it till maturity, because a lot of times cycles turn and you need to be able to know that before you get into thematic funds. So please bear that in mind. Having said that, I know a lot of you wait for queries to be answered. We are going to take the liberty to ask some of the queries that have come in today's show as well. to our guests and then try and get the answers. So the first one is from Devahuti. Devahuti is aged 26 years. Devahuti's question is that if I opt for a 10,000 rupees per month SIP starting this month, which I believe is December, with an expectation of a 15% return over 30 years, how should I balance my portfolio? Mohit, can I start queries with you?
Yeah.
What would you have to say to Devahuti?
Okay, look, so the time horizon is extremely long, which is 30 years. That's a great time horizon. I would rather advise him to go with a 4-3-3 approach, which means a 4,000 in a large cap index fund. Out there, he can start with a Nifty 50 index fund, a 3,000 in a mid cap fund, and a 3,000 in a small cap fund. And both of those other choices could be active funds. On the mid cap side, you can go with an Edelweiss mid cap. On the small cap side, you can go with a Bandhan small cap. So a large pure mid, pure small, that should be good enough and to start with.
Okay, Juzer, do you have any advice?
So I would actually be completely aggressive, and I would actually recommend her to do just a split into two parts. One a small cap, and one would be a mid cap, because now the whole small caps size itself has undergone a change. Like, we may see that SEBI's definition of small cap is still the same, right? So the stocks which you see in a small cap funds are pretty large in sizes, and with a 30-year time horizon, it's a fantastic time horizon, and that's a great way to build alpha. Maybe after 20 years, which can change the portfolio, but I would put it more as small cap and mid cap.
Okay. Well, Devahuti, I hope you got the answer that you're looking for. Aggression may not be a bad idea, I think, per se, because of the time horizon and the age being on your side. Not that age is not on Prakash Maheshwari's side, just a little bit later, 53 years of age. And Juzair, I'll come to you on that one. And Prakash Maheshwari asks, is whether if January or February is a good time to load the mutual fund portfolio with a large lump sum investment, or should Prakash Maheshwari make the investment now in the month of December? Now, this is serious timing led question, Juzair. I'll come to you first on this one. Any thoughts?
So I don't think that any month makes a difference. So for me, all the months are good months, and in fact, so whether it's January or February, March, April, May, June, all other 10 months are also good months. So I have no idea on what basis Jan and Feb has been considered by Mr. Maheshwari. But so according to me, it depends on what's the time horizon, the what he has the money for. So if he is looking at a longer term time duration of 5 years plus and all, and considering his age, I would actually 50% of the money can also be looked at as multi-asset funds, and 50% could be into a flexi cap. So you have a and I'm assuming that the duration would be 5 years plus. So you could make a reasonably composite portfolio in the next 5 to 7 years. So that's what I would, and maybe stagger the investment. The multi-asset allocation could be done just now, so that would be 50% of the money, and the balance 50% could be spread in the next 3 months. So by March you can complete your investments, and at least you will have two major events out. January is you'll come to know whatever Trump is doing, and in March, by March we'll be even through with the budget or whatever it may announce.
Okay. The next query is from Bikash Dhali, age 45 years. Mohit, the question is for you. Bikash asks, what are your thoughts on Tata Nifty Travel and Tourism Index Fund? Any thoughts here?
Look, I think the whole play, Neeraj, out there is on the increased mobility of Indians, not just within the country, but also outside the country. And there are, and all these hotel stocks, all your perhaps eating out, staying out, travel stocks, right? And there are multiple other ancillaries to this entire thing, which are doing extremely well, exceedingly well. In fact, I think. what do you say, the capacities are overbooked. The flight fares, if you were to check any time from 20th of December to 31st of December within the country, there's nothing which comes to you below 30 to 35,000 to 50,000 range, right? Honestly, sometimes it feels like going abroad is a cheaper option. So given all the scenarios and the way Indians are lapping up to the concept of traveling more and more, I think it's a great long term idea. Honestly, is it a good bet for next 6 months to 1 year? I'm a little skeptical because the whole basket per se has risen a lot. Has risen a lot post COVID. There's been a euphoria on travel, and I think that's got suitably and adequately got captured by stock market across all the sectors and the stocks which are linked to this entire concept. So my sense is perhaps it's got already built into the price. However, this can always surprise you on the upside. So if you're getting into it, get in with a view of at least 3 to 5 years, not with a shorter term view.
Got it. Okay. Okay. Thanks for that. Very quickly, Juzer, one final query. I'm trying to squeeze this in limited time, but Prathamesh, age 57 years, is asking, is it practical to expect 20% annual return from mutual funds across 10 years? I think the answer is a no, Prathamesh, but let me get Juzer to answer it. But if it is practical to expect 20%, please suggest good funds that I can invest in. Juzer.
No, 20% is not going to be possible. In fact, we had a historical average. If you see even the Sensex return is around 15%. And as we go ahead, I think even that 15% is going to be tough. So, and in fact, always the more return is better. So your expectation should be less. And if you are getting a surprise on the upside, I'm sure you will be able to absorb any good returns which you're getting in. And if you want to do, the only place maybe where you could expect some sort of a better return, because 10 years is a long period, you get the benefit of power of compounding also. But the only place where you could get this type of a return could be being aggressive. So it could be only a small cap play or a pure thematic or a sectoral play. So only if you have that appetite, and if I look at your age profile, it doesn't seem that you should have that
Got
type
it.
of an appetite,
Yeah, yeah.
right? So you should lower your expectation.
Lower the expectations, sure. Okay, we are out of time completely. Gentlemen, thank you so much for taking the time out and being with us. And that's a wrap on this leg of the Mutual Fund Show.